As we enter a new year of trading, I'm joined by Serge Berger, head trader and investment strategist at thesteadytrader.com, who's here to provide us with some technical analysis and his outlook for markets. Thanks so much for joining us, Serge. I know you're in Zurich there. Let's start with the US equity market, specifically with the S&P 500. We've been retracing some of those heavy losses from Q4 in the past few sessions. Do you see further upside from here?
Hey Victoria, good to be on. Yeah, I think what's happening here is we have to contextualize how we got here. And if you look at global equities, maybe ignoring the S&P 500 for just 1 second, most of those stocks really topped in January of 2018, so just about 1 year ago. So any lower highs after that were made throughout the year of 2018, except maybe for the S&P. But the S&P 500 finally started breaking down, as you said, in the fourth quarter of last year. And what's happened as a result, if I zoom in a little bit closer on this chart, is we finally retraced back to sort of a mean reversion level that is important, which is this blue support line, which also happened to coincide with the 200-week moving average. That's the red line on your screen there. It's a natural spot for things to bounce. Through the lens of technical analysis, things got very oversold. The VIX spiked above 30, which I thought was a very important thing that needed to happen for stocks to be able to finally give us a bounce. And now the S&P's bounced about 9%, and of course, correlation tends to increase as markets get more volatile, so everything else is bounced as well. The situation now, though, is that with a lower high for most stocks late last September and throughout the year, there's a lot of overhead resistance now. So even on this daily chart, you can see the S&P 500 is entering into that band of resistance between about 2570, so 2,570, and about 2,600. And this is just ahead of an earnings avalanche and just a lot of near-term froth in the market already. So I think it's quite likely we are going to stall here and arguably retest those recent lows. Maybe somewhere between 2,500 and as low as 2,350 or so would not be out of the question, in my opinion. And I expect a much more volatile year once again in 2019 in general.
Now, I know you wanted to take a look at the biotech sector, specifically on the Nasdaq as well. So what's going on in terms of the charts there?
This is interesting. This is sort of, if you want to look at it through the lens of purely technical analysis, this is not a chart that looks very good through the lens of sort of a few months or maybe a few quarters. Very much, speaking of lower highs and those kind of things we talked about on the daily chart of the S&P 500 before, you can see a major lower high being made this past September in what's called the IBB ETF, is the ticker symbol. Nasdaq biotech is the large mega cap biotech stocks, and they finally broke trend in in December of last year. Now they're retesting. This is a weekly chart. You can see all those moving averages. This is the 50-week, the 200-week, the 100-week. They're all coming together, coinciding with horizontal resistance, diagonal resistance, former supports, just a lot of stuff, a lot of overhead resistance coming in here. So I'd expect that recent rally we had over the past week or so, which was largely due to A, the broader market, and B, a couple of deals being announced, M&A deals, I'd expect that to start fading again real soon and maybe retesting those lows again.
Now let's switch to commodities, because 2018 was a difficult year specifically for gold, and there's been some discussion in the markets recently that this could be a much better year for the precious metals. So what does it look like from a technical perspective?
It's interesting. I always find gold to be a rather difficult thing to trade, if you will, but this is sort of your big picture chart on gold on using the weekly time frame. And you can see we've essentially been kind of wedging for the past almost decade or so. And ultimately, I would think this is going to resolve probably to the upside. Now, we're using the GLD ETF here to kind of make things simple. And I think sort of a break and hold above 120 is interesting. Now, what's more interesting and arguably more important for me is how gold is looking relative to, say, something like the S&P 500. So creating a very simple ratio chart, you can see that gold is actually starting to act better, not just in absolute terms, but also in relative terms versus things like equities and actually some other things as well. So I think gold, the GLD ETF for me is something to look at here and alongside for the first time in quite a long time in 2019.
So a possible breakout to the upside for gold itself. What does that mean for the gold miners?
Well, the gold miners, there's a strong correlation between gold and gold miners looking at the GDX ETF. You can see here a very similar situation. You know, the correlation is quite high there. So I think if you wanted to get a little bit more leverage trading gold, I think something like the GDX and even some of the single stocks, I usually tend to gravitate more towards the larger cap ones versus the really small miners that tend to be a little bit more volatile. But I think that's just basically, we use as a proxy with a bit more leverage to trade gold.
Serge, thank you so much for your time.
Thank you.
That was Serge Berger, head trader and investment strategist at thesteadytrader.com. I'm Victoria Scholar. Thanks for watching IGTV, and remember to follow us on Twitter. We're at IGTV for more updates, or my own account, which is at VictoriaS_IG. See you soon.